All right, so gold on the 22nd of Jan, there were two scenarios. First was continuing with the breakout from last week's coil, extending a 200% range expansion that it's already made over 1 to 3 days of breakouts in a impulse correction to a 38.2 Fibonacci of that impulse, the correction thereof, and continuing out. And not that I did, because one of the things I'm doing this year is not trying to shoot for the fences and being content with in and out on the day, as it were. And in any case, there was a 200% range expansion level up for grabs. And we'll see how that played out in a moment. Okay, so there or thereabouts. I don't know if I've drawn that properly. I don't think I have. Right, so 200% range expansion extension up towards a 300% range expansion. We got the psychological 5,000 number on the radar. And we had on the day itself a W formation put in Asia, a lovely coil, which is essentially, we'll get to that in a moment, a bullish flag into the New York Open. However, risk being a very strong move from trap volume from the prior day in what was a death line set up for the breakdown of the coil, pump, coil, and dump template. And that in itself could have been an impulse correction, 50% correction or thereabouts of that drop into the closing price, coiling to roll over, break down, and continue lower. So it was one or the other. I was in favor of the trading with the trend. On the other hand, it was on the backside of the impulse, arguably, depending on where you draw that trend. But being pedantic and keeping it as tight to the touches as possible, we were technically on the backside of that bullish trend and on the backside of the week. So that could have easily been a day two runner to the downside. So the daily cycle, day one, day two, day three, resetting day one, day two, day three extension on the daily cycle, or a day two template to the downside coming out of a day one high of the week template on the cycle of the week. Okay. Now, I'm not going to get into the market profile, but we had a point of control, depending on what profile you're looking at, round about where the prior day's New York Open was. So if I was going long, I was seeking a decent reward into that area. So we'll get to that in a moment. That's essentially where I got out. And I didn't leave anything in there for the continuation. So what I liked about the bullish scenario was the W formation down low, and then let's get rid of all these markings. That's better. So W formation down low, the coil, which is essentially a flag pattern, bullish, tucked in below that level. Now, coils below levels can equate to very nice breakouts. So these were the two patterns to consider. We had the bearish pennant, so impulse correction and then continuation to the downside. But I was in favor of the W formation above the prior day's low inside of yesterday. So essentially bullish bias due to the breakout of yesterday still in play. So there's the breakout. We're still above Tuesday's highs. Okay, so bullish bias, W formation confirming the thesis bullish, and then the pullback into the neckline. There's the neckline, nice healthy pullback, plenty of support there. London low, and then the flag, bullish flag formation into that support area, and prospects of an explosive parabolic move in a parabolic day. Bullish Asia, and then higher high in London, breaking out. Now into the open, I was actually set up for a long off the bat from the closing price. With the stop below the London VWAP, but I was hesitant because we didn't have anything really bullish on the candles other than this fact that we're sort of coiling down, so the dump into the open, but then I didn't like to be pumping up into the open. I'd rather if we'd been dumping down into the open and then the pump. So I was a bit reluctant. We didn't have a fake out low or anything, and I was somewhat kicking myself because, as you'll see, we got that, and so that would have just been a click and go, and that could have been 3R off the bat. I had my stop somewhere that given us a 3R outcome, I think it was something like that. Anyway, so I was wondering if this wasn't just going to go, but then what we got was this beautiful raid on the 30-minute low. So I've got this set up so that it shows me the raids on the 30-minute candles above the London VWAP, and then that was my 10-15, my sweet spot entry criteria for. Oh, I've already got a thing on there for the. And I actually got in twice, so a double up risk. So it turned out to be an extremely decent trade. So that there is the 30-minute raid, 30-minute candle. So it's essentially a wick, sweeps liquidity, fake out low, and then takes off in what was a bullish flag breakout. Now, I was originally set up for a continuation, as I talked about, the continuation of the pattern up into a minus 27.2-ish area, coming up into a 300% range expansion. But I decided to come out where I did and just watch that continue up. But that's the way the cookie crumbles.